Hey everybody, happy Monday. Hope you're doing well. It's been a busy weekend. Happy to be back at it Monday morning. I have a couple of things to go over today. Um, the one being how to hold on to your winners. Right, this is something that I had to learn to do, and it's this is a situation when you think about managing the trade, right? Because it's not the entry criteria that you're looking at. It kind of is the exit criteria, but it's really still married with your position sizing. Now, there's a million ways to take your winners. Some people scale out of them. Some people sell it all at once, which is what I do, because I'm comfortable with the feelings that I have around regret. I think when people want to hang on or scale out, they're hanging on to one little extra piece as if the market's going to go and keep moving, and now you have a suboptimal risk unit on. So for me, that wouldn't make sense. You have to do what's best for you. But when the party's over, everyone has to leave. So I puke out the whole thing. When I think about taking winners, I think the issue is a harder issue for newer traders, especially those with underfunded accounts, because again, you're trading 5K and you're using a mini or a micro contract and you're taking $100 profits. I feel like you're going to be stuck in that rut for a long time. It's awfully difficult to kind of make any growth. And you're just going to, it's not like you're going to churn your account by buying and selling and buying and selling, like from a commissionable standpoint, but just the daily grind every day is the churn. And it's awfully hard to grow. So you really have to think if you're trading one of those smaller accounts. And look, I've been there, right? So it's easy to talk about now, but I can speak from experience what it's like to have an underfunded account and, have to make money. You really need to start thinking about, how do you take $500 to $1,000 out of the market? That isn't going to happen typically from a day trade. But those are the types of trades that are going to change your life because your account's going to grow. 5 becomes 6, 6 becomes 7. Next thing you know, you're pushing 10K and it's a different world. You might be able to trade, if you look at the volatility of the instruments that you're looking at, you might be able to add a contract or two and trade larger at that point. There's a whole science into scaling up, but it's a much slower process than you might think. But I want to stick to, holding on to your winners. If you look, first a little background. When I started, you have to understand that stocks traded in eighths. There was no decimalization. And commissions it's not like they were expensive, but they were substantial enough to give you a moment of pause. If you looked at, let's take the lowest increment for the most part. You buy 1,000 shares of something. Commission spread, first of all, the bid-ask spread is going to be an eighth. So say you're trading something that's like 16 bid offered at an eighth. It's very hard when you're working at a place to tell them that their executions aren't worth all that much. So let's say that you could pay an eighth as a commission, because that's typically how it was priced. It wasn't priced in pennies. It was priced in eighths. So now you have an eighth and an eighth. So now you have a quarter just to get in. You have to pay the bid-ask spread, and you have to pay an eighth commission. So now when you think about your total cost, forget the accounting part of it, but your cost is a quarter. You have to think to get out of the trade, it's probably going to be something similar. The spread's going to probably stay tight at an eighth. You're probably going to have to pay an eighth to get out. So now you have 4 eighths, 2 on the bid-ask spread, and then you have an eighth on either side, right? Because it's not round-turn commissions like futures. So now you're looking at 50 cents. So you need a 50 cents move in the underlying basically to break even. And that's if the spread was an eighth and you could get an eighth commission. Oftentimes the spread would be, for those bigger, when Sun Microsystems and Cisco were coming up, those were pretty volatile stocks. And, you're looking at a quarter. So now you're looking at a quarter, maybe an eighth, maybe a quarter commission. So now you're talking somewhere between 50 cents to $1 as your break even. So that discouraged me to say, I can't be an active trader. Those costs are just too punitive, and I'm still learning my craft. I can't really define what my edge is, right? I know I have to make attempts, But I need to really think longer term. I need to think looking at weekly and monthlies, where are the numbers more substantial, so I can skew the odds, to my favor. So that kind of took me out of the short-term game. I've talked about that before, just because it was too punitive, and it just didn't make sense financially to try to do all that trading, because I knew guys that were trying to do it where they would actually show like $2,000-3,000 for the week as P&L, but their account was flat. No, moreover, now you got a tax bill. So that just didn't make sense. The other thing that I did was to help, look at myself and my behavior, was to say, okay, I have an underfunded account. I need to really isolate the things that are working on higher time frames. Some people are looking at 1-minute bars against 5-minute or 15-minute bars, or some kind of combination of short-term bars, and they're looking for divergence. Now, if you look to the left when you're looking at a chart and you see a whole bunch of structure, to me, there's really no trade unless something's making a new high. I don't care about divergences. I don't know where anyone started to look at that as an entry signal, but you need to be looking at, if your account is small and you need to make money, you can't worry about picking bottoms or pullbacks. You need to find things that have high relative strength and are pushing into new highs. That probably means breakouts, right? In order to get over the regret and to better conjugate that feeling with my behavior, right? Because we want to talk about this thing called praxis, right? It's where you belief meets your behavior. If your goal is to become wealthy and to grow your account, you can't do that by taking small gains. So starting this week, get that out of your head. Stop worrying about 2 points on the E-mini or whatever it is that you're trading. It's a quick way to the poorhouse, as far as I'm concerned. You really need to think with even 10K, you need to be thinking about pulling sizable trades out and doing maybe 1 or 2 transactions a day. There's really no reason for you to be sitting there banging away at your keyboard to try to make small gains and stuff. That's just a big churn. And to be frank, I don't know anyone who's done it. That's the issue, is I have to have integrity with you. Maybe you know somebody who's trying to make 9 points with a 1-point stop. I just don't have the time for that. I just don't have the time for that. To have to sit on the market like that and do it. So what I would like you to look at, if you want to better understand your own behavior and how you can change how you feel, because I feel like when you're taking small gains, remember how I said there's 2 payoffs to every trade? There's the financial and there's the emotional. When you have a small account and you're trying to come up and become validated as a trader, I was going to say that taking a $100 gain on a trade, 80% of that goes towards the emotional fulfillment, because there's really no money there, right? There's no money there, even though you could say, yes, it's whatever, 2% of your account or what have you. And yeah, I guess on some level we can sit and agree that it does something for your confidence. But when you think about your R and then the frequency with which you trade, whatever your commissions and fees that you have to pay for clearing, you might find that you're doing a lot of work, but in the end of the day, when you look back over the last 3 months, how is that different than shoveling sand against the tide? Like, how do you measure progress at that point? Because I think people can talk themselves into progress when there really isn't a lot of progress. And so I had to hold myself to a higher standard. Like, who's the judge and jury here? On some level, I am, but what is the data that I'm looking at? I don't get to say I'm working hard. No one cares. Look how hard Michael Jordan outworked. Best player in the NBA ever. And he outworked everybody. His competitive spirit was ferocious. So you have to be somewhat your version of that with yourself. So then when I wanted to conjugate how smart I was versus making money, because sometimes those things are not related, you can be really smart, but you can't execute. Unfortunately, you're not going to make it as a trader because we get paid to execute. Is I went back and looked at the trades that I was in. So say I bought something at 16 1/8 and it went up and I sold it at 18. I'm like, okay, 2 over 6, 1/8, 12% on the trade. Net of things, this and that, maybe I cleared 10% on my risk unit. So then I'd wait like a week or two and I'd come back to it and I'd look at the name, not because I had regrets or I was like voyeuristic, but I just wanted to see like how could I clean up my own behavior. And I would look and see like where was the name after I got out. Did I get out on a reversal and it went back down to 16 or 16 and change, in which case my exit was good, in the short term, relatively good, or was it 20? And then how could I better filter those exits? And what was it that I was feeling at that moment in time that compelled me to want to take that gain for that rate of return on my bet size, which you can translate and look and see what it is as a rate of return to your account balance, and where was that name? And for my style of trading, it oftentimes worked out more than half the time that the trade was still moving. So then I kind of had to understand the nature of how powerful these moves can be, especially when I was looking at higher time frames. And I didn't want to, because I had a job to do, so it wasn't practical to sit in front of the screen and think about trying to make 5 to 10 trades where the expected value was $100. It wasn't worth it as a rate of return on my time. So you have to figure out what that is as it relates to yourself. Only you know what that is. But as a study, that's what I did, is I went back and looked and said, okay, today I can celebrate taking that small gain. But I want to come back to that trade as a post-mortem in a month and see what it looks like. Because I need to learn from my own behavior. Because a lot of behavior around trading can come from your subconscious. And so it's harder at the beginning, and sometimes even for more experienced traders, to know, like, are they taking off trades, locking in gains because they know incentive fees are coming up at the end of the month. So everyone wrestles with this regardless of their level, because it's all percentages. The numbers might be bigger for the institutional folks, but at the same time, they go through the same emotional machinations, if you will. And that might be a good way for you to kind of see, what's going on. Case in point, today is, what is today? The 23rd. The equity, if you're trying to buy the equity indices long, you're fighting. To me, you don't want to fight the tape, in that if the instrument is not trending up, it wouldn't make sense to buy anything long, even if you do see a divergence. Because to me, again, the numbers aren't statistically significant. It's kind of noise happening in a bigger range, you see? And so I would, and I know it's harder to do, because once you start getting out of the micro contracts, it's like you can't afford to have a 30-cent move on the big soybean contract. It's $1,500. So whether you have margin enough to be able to be in the trade, then you have to try to say, okay, I can't take the daily vol because it's just too big. And then if it's like, well, I can risk a nickel, maybe, or 5 cents on 5,000 bushels is what, $250. But now I know I'm trading inside the ATR as my protective stop, and so I'm likely to get stopped based on noise. This is why I've said it's harder than you think to trade, even though the people on the TV, tell you how easy it is, and you have all these features and advanced charting packages, and you have hotkeys. When you really think about it, when you have an underfunded account, it's hard to find instruments to trade. So now you're in a coping situation, and I don't know anyone who's a raging success out of coping in life, right? This is just a microcosm for life. So, what are you going to do? There's four contracts that you could trade. There's minis and micros, but now it's like you have to try to. This is why I hate those funding challenges, right? Because they're really not challenges. And if there is a challenge, it's how can you change your emotional makeup to try to fit a bunch of bogus trading rules. I got to make 9K, but I can't have a 3K, more than a 3K drawdown. Okay, I wouldn't be able to pass those. Then I have to do 10 trades. Yeah, I did one trade last week. One. So I don't want to see you guys cope, because you're like, okay, my account is small. I can just pay this money to this funding account place where they don't really fund you. They kind of pay you out of everybody else's fees. It's like another cable bill. I'm ready to being able to do that, because then it opens up a whole new world for me. But now you have to cope. And you're like, what do you mean? Well, how do you know that you as a person are congruent with those trading rules, right? We're talking today about holding on to winners. I would never be able to pass any of those trading challenges. I would fail. I'm looking you straight in the eye. I would fail. There's no way I could trade under those parameters. And the same thing is like when you have an underfunded account, you're kind of coping. So no matter where you go, as far as I'm concerned, it's not like the odds are against you, but your choices are extremely limited when you don't have enough capital. Yes, it's true. You can fund an account and you can buy a fraction of a share of a blue chip stock. And there's something to be said for getting started, no doubt. But you just have to be realistic and practical that the financial abundance that you think that you're getting from what you're hearing in the marketing world, it doesn't really show up, to be frank. The only way I know how for you to escape blue-collar despair is the same way I did, which is to buy things that are making multi-period highs, not intraday divergences, and hold them for substantial gains. And that might mean letting go of your fear of overnight risk, because you really need to grow your account fast. Why do I say that? Because I think there are people who are in that kind of churn where they're kind of working hard, putting the hours in, doing the short-term thing, and they've been doing it for 3 years. And I talked with Ganji. It might be on this week's episode because we recorded 2 last Thursday for this Wednesday and next Wednesday. And I talk about how, the odds are just against you just because of how the business is set up. Now, compliance has to say, there's certain things that we can't allow you to do because we first do no harm. There's all kinds of know your client rules. So they block you out of doing certain things. I know where they're coming from, and I think in the end, it's probably better than not. But it's extremely rare to find somebody who started with like $1,000 and traded it up to 15 million. They're out there for sure, and more power to them. But you just have to understand the difference between what's possible and what's probable. If someone else has done it, right? We go to black swans. If someone else has done it, it's certainly, you can say that it's possible because that's an observable event. But whether it's probable for you, given your emotional makeup, the other thing you need to do in your brain is to stop caring about the money. You have to let it go. You have to put yourself in a spot where, in order to do what you're doing and in order to take really good risks home overnight, you have to think about getting bigger gains and visualize them, and then stop caring about the money. Stop being so in fear, like once you put on a trade and you're looking at the screen, watching it tick by tick. That's not what winning traders do. So to me, that's why I say the majority of what you need to have in your ability as far as knowing when to take winners and to offset winners, right? You're covering if you're short, you're selling it long, if you had it in your account long, is to change your mindset emotionally. Tactically, it's simple. You adjust your stops. You can leave them good for the day. You can leave them for good till cancel. Execute them in the overnight sessions. If the markets you're trading have overnight trading on the screen, or you can just wake up in the morning and re-enter your protective stops every morning, right? But like I've said about gaps, if you're in strongly trending names, the gaps are going to happen more in your favor. And yeah, once in a while, you'll see a gap against you. That'll take away some of your gains. Maybe you'll even lose a little money. From time to time, like I said, maybe once or twice a decade do I have something like that would trade through where I would normally enter my stop. And I'm like, okay, that's going to happen from time to time. I know when you're younger, you're like, oh, no, not doing that. But I think if your goal, you want to marry your goal with your behavior, and if your goal is to grow your account, you can look at your past behavior, see what the expected value of a trade is. You can use Kelly criterion to figure out the number of trades. It's going to take you basically, forever. It's going to take you forever to grow out of that small trade, that being that small trader. You can obviously just keep putting money in your account and grow it that way over time. So trade it for gains and put in 500 to 1,000. That means you might have to curtail your spending. and increase and boost up your investment. Might mean you have to get a side hustle, wait tables on the weekends. It just depends on how much you want it. But I can guarantee you this: if you keep taking small gains, you might as well go to West End 2 at Jones Beach or Santa Monica Bay and start counting the grains of sand one by one, because that's about as fast as how your account's going to grow. It's an emotional decision that you have to make to learn how to hold on, how to hold on to your winners longer. And so you have to get comfortable being uncomfortable. You have to let go of the money. I'll finish by saying this because I'm gone on a little too long here. I put myself in the mindset saying I'm willing to risk all of this money in order to learn my craft. Because once I do learn my craft, my money's going to grow geometrically. So I don't care about the drawdowns heretofore. My money, or my cash, the corpus in my account, if you want to call it that, is a tool. It's not money to spend. It's simply a tool for me to learn my craft. Right? You want to learn jiu-jitsu, you got to put on a gi, you got to get on the mat. You're going to get smashed. There's no other way to do it. You can't watch videos and be like, yeah, I got mataleao, I can do rear naked chokes, no problem. You can see it. Again, you could learn intellectually how to do it. But in order to actually pull it off, which is not necessarily an easy move, right? Because your first thing you talked about is protect your neck, don't get submitted. The same thing in trading is like you have to let go of your money. You have to let go of your emotional attachment to that. And if you lose it or lose a good chunk, you'll learn more, especially if you're younger. The majority of your income earning years are in front of you. The hell are you worried about? You have to put the money on. You have to learn how to risk capital to learn your craft. It's too early in the situation to think that the way you're trading now is how you're going to be trading in 5 years. Markets are going to change. And if we do go into a recession and there's more pressure on stock, you're probably going to really need to learn how to trade both sides of the market, long and short. So anyway, I went on a little bit longer, but I know taking winners is actually hard because you're like, I want to take the profit, but I know I could be leaving money on the table. If I put in my initial protective stop and it goes down, that's an easy equation. I just have to have the emotional fortitude to stay with the trade, get knocked out. But when do you really know to take winners? That can be a big mind-effing process, basically. So anyway, I've been on here for 20 minutes talking about it. That's how I would approach it if I had to do it now, is I would think in my mind, how do I take $500 to $1,000 out of a trade? That means I have to hold it longer because you don't want to trade larger. Trading larger, and when if you don't have an edge, is a quick way to lose some money. And you have to get over what I would call an irrational fear about overnight risk. You could trade the smallest amount of contracts, the smallest contract, the smallest number of them, and you could trade one damn share of stock if you had to. There's always a way to position size where it would make sense. Anyway, please like and subscribe. I'll be back tomorrow, and then I'll be here Wednesday with Ganja. We already have the episode recorded, so I can't screw that up. Thanks for being here, folks. I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.